Well, earlier on, I asked Matt Arnold, Edward Jones's analyst, about what he thought of Walmart's numbers.
There were some soft trends here in the U.S. again this quarter, similar to the prior one, but the international business and even the Sam's Club business were able to still allow for some growth overall.
Yeah, as Mike Duke, the CEO of Walmart, mentioned on the conference call, Walmart U.S. had a challenging second quarter. There's still some doubts about the U.S. consumer. What did you think about, I guess, going forward? Will we see the U.S. consumers flock back to Walmart despite all the rollbacks failing to attract consumers so far?
Well, we don't think that the consumer will necessarily slump back. I think it's important to keep some perspective in terms of who Walmart's core customer is. Its core customer is a lower income customer, and the lower income U.S. consumer is facing a little bit more of a challenge. They have higher debt burdens, and by definition, when you have a low income, it takes more time to pay down those debts. So Walmart's core customer will take some time to come back, but in general, consumer spending should continue to gradually show improvement relative to last year as we progress through this one as well.
Sorry to interrupt, but what about pricing and margins? Because we had Walmart having to cut back on prices on cereal, detergent, and other items just to try to lure back the U.S. consumer. Will we see margins still under pressure, considering we're still trying to get the customers back into the store right now?
Well, Walmart's strategy will probably be to use fewer of these price rollbacks going forward relative to what we witnessed this quarter. So that should be somewhat of a help for margins in general. But you're right. I mean, they're treading a very delicate balance of offering low prices to get traffic in the door and actually retaining some margin for themselves. And, you know, going back to who their consumer is, a lower income consumer relative to some other retailers, that's going to be a tougher balance for them to strike than perhaps other retailers in the U.S.
Okay, well, Walmart is focusing internationally as well. They opened 7 China stores in the second quarter. Do you think going international, looking at the emerging markets and looking for economic growth is the way forward for Walmart?
Yeah, it certainly is a way forward, and it represents a very attractive long-term growth platform for the company, given how large and mature they arguably already are here in the United States. So long-term, the strategy makes sense, and even shorter term, the fact that 1/4 of the business is already outside the U.S. should help them, given, you know, what could be, you know, some challenges with the core lower-income U.S. consumer. So that is definitely a strategy that helps to diversify out the sources of growth and should help to aid results going forward.
Okay, so with an uncertain outlook really over the U.S. consumer, what about Walmart's share price trading at $51 US right now? Do you think it's fair, and how much do you think we'll see in terms of gains for the stock?
We do think the stock is fairly valued at current levels. That's why we do currently rate the share as a hold. The stock admittedly does trade at a valuation below what is normal for Walmart, and it's actually trading at a discount to some of the other best-in-class retail companies out there in the United States. But we actually think that's justified right now. Their fundamentals aren't quite as strong in terms of rebounding as some other areas in retail, and as a result, we think there are probably better areas to put money to work right now.